Good morning, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So feel free to respond in the comment section. If you have any questions, feel free to type that in the comment section, and I will be responding to that right away. So before we make any progress, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. Hello, Leonard. Hello, Caspar. Good morning, and thank you for joining the session. Let's get things started. So I'll be starting by first looking at the top news on the economic calendar so that we can know the key events to focus on for the day. So one of the top news in the markets today was basically jobs data coming in from the UK. So regular pay, which excludes bonus payment in the UK, went up 7.7% year on year to £621 per week in the 3 months to September 2023, which was below the 7.9% in the previous two periods, which was a record high rate and in line with expectations. It's the first decline in regular wage growth since January. Wages in the private sector rose 7.8%, below 8.1% in the previous period. While in the public sector, wages rose compared to 6.8% in the previous, which is just rose 1.3 of the. So as you can see from right here, crime count change in the UK was $18.8K. This is the number of people claiming for unemployment insurance for the first time. The last increased to 17.8 thousand compared to the expectation of 15, claiming for an acute. So on the other hand, average out was at 7.9%, which is slower than 8.2%, but also consider that we missed the expectation of 8.4%. So a quick observation on this. You'll notice that on 2020 through 2021, this is best growth. Then this this year. So since then, we went with the bank data to side. So I lost my connection for a second. Hopefully, I'm back. Can you confirm this? So I'm seeing responses. Thank you, guys. I'm back. Hello and good morning, Matthias. You can see Derek. Thank you, guys for joining. I wanted to find out which website is good to check for CPI. I think one of the best websites you can check for economic news releases is Forex Factory, but also you can try out an economic calendar that is on tradingeconomics.com. All you have to do is to click on calendar from the website, and you'll see a highlight of all the key events, especially for extended economies, that you will not find in other calendars. For instance, here you can see there's news about Korea, Australia, Japan, Turkey, India, and so on. So the key highlights for today was UK jobs data. And as you can see, this calendar will show you the different metrics that were reported. Things like HMRC payrolls change, claimant count change, average earnings, uh, employment change, as well as the average earnings, including bonus and so on. So this tends to be a better calendar because it's more data rich. It will give you more information. And of course, we all know that the major news for the day is the CPI. So we can basically assume today is CPI day. However, before we get to that, at 1 p.m., we will be having the flash GDP data from the Eurozone. We'll also be looking at the ZEW Economic Sentiment Survey, and all these will be released at the same time at 1 p.m. So this could increase some volatility in Euro pairs, including Euro USD. But then we'll also be having a speech from FOMC member Jefferson. This will be at 1:30 p.m. Then MPC member Dingra will be speaking at 3 p.m. and this could affect the GBP. But then most importantly, every trader is looking at US inflation data report, which will be released at 4:30 p.m. So one of the key focus points will be the change month over month. So we are expecting that in the month of October, prices for the basket of commodities in the US increased by 0.1%, which is a very small increase compared to the previous reading where there was a 0.4% increase. So in the overall year-over-year number, we expect inflation to slow down from 3.7% down to 3.3%. And the main focus here is on the energy prices that are currently slowing down. So with energy prices slowing down, we should be expecting this to drop to 3.3%. So for core CPI, month over month, we expect a 0.3% increase in prices. And this is for the month of October. So we're expecting a similar increase just like the month of September. So for core inflation, and in this case, focusing on the year over year, we are expecting this to move to 4.0%, down from 4.1%, which was the previous reading. Of course, the consensus estimate by economists is also displaying 4.1%. So if we see core inflation dropping, this will be quite significant, especially for the Fed, and it could be the last signal showing that the Fed may not go for further rate hikes with a bigger drop in inflation. So if we see core inflation dropping, let's say below 4%, that will be significantly indicative that rate hikes have come to an end. But then if we see a bigger number, let's say something higher than 4.1%, inflation month over month increasing by higher than 0.1%, then in that case, we could be seeing the Fed going for another rate hike. And in that case, we could be betting on a stronger dollar, whereas we could also be seeing weaker equities. So in this case, out of projections are estimating that the inflation is going to be slower than expected. And in that case, it could cause some form of weakness in the dollar. So in this case, we have to be all eyes on the data release because it has the potential to cause extreme volatility for US dollar pairs. We could be seeing extreme volatility in US equity indices, such as the S&P 500, the Dow Jones, the Russell 2000, of course, the NASDAQ 100 index. So be prepared. We could also be seeing some extreme volatility in gold as well as oil prices. So it's one key event that is expected to cause extreme volatility in a lot of other markets. So remember, later on, after the announcement of this data, we'll also be looking at a couple of speeches from Fed members. So we'll be looking at a speech from Fed's bar, Miester, as well as Goldspeed, and this will be 6 p.m., 7 p.m., and then 8:45 p.m. So clearly, it's an action-packed day with a lot of expectations being inclined toward the US dollar. So still checking on our comments. Huge intermittency. So checking on last comment here, the American economy is fundamentally strong and treasury securities remain the world's preeminent safe and liquid asset. However, why does the credit rating keep on downgrading the USA despite knowing that? So the main reason that we saw this happening on Friday last week after market close, and this is about Moody's downgrading the US credit rating. It was as a result of what the current debt status means. So with the US debt rising above that $2 trillion, it basically means that the US has a huge burden on interest payments. So the more you see yield going up on US treasuries, it means that those are expectations that the Fed will keep paying. And as long as it is not increasing its revenue, then it basically increases the risk of default. So while we know very well that the US may not default on its debt, but then we also know that it could turn its printers on, which would devalue the currency. And this is sufficient risk to push Moody's to downgrade the US credit rating compared to other economies. However, there are other metrics that they also consider, but that seems to be the key driving factor. So on the charts front, there's quite a number of things to observe, starting with the dollar index, which happened to form a head and shoulder pattern here. And this was last week before pumping on stronger and moving even higher. Then after it got to this high, or we are seeing some form of consolidation. So today being the second day of the week, what we are seeing here is a market that is consolidating. It's not showing a lot of momentum. And this is akin to when we are basically waiting for a key market driver. So in this case, the key market driver will be the consumer price index, or CPI. So markets can sometimes consolidate like this as we anticipate a report on the economic front. And once you get the report, then the market finds a direction. So in this case, if we are going to see lower than expected inflation, then in that case, the dollar would continue weakening. But then if we happen to see a stronger inflation, which would basically mean that the Fed has to continue the tightening policy, then in that case, we could be expecting the dollar index to be shooting much higher. So as for these other pairs, for instance, the pound USD, you can see there was a huge rally 2 weeks ago. Then last week, we spent the entire time trying to erase the gains that were made in the previous week. And now this week, we are seeing a continuation here. So fundamentally, we are looking at a market that has just broken this cycle of bearish momentum, broken towards the upper side, pulled back to retest the support, and is now heading higher. So we are seeing these major currencies make a recovery against the dollar. So same case applies to USD JPY, but then the USD JPY seems to be the weakest currency. So currently what we are looking at is the USD JPY flirting with the level that was last seen 33 years ago. And by 33 years ago, I mean the 1990s. So I may not have all the entire chart history, but I'll try to find one for you guys. So let's use trading view. So from here, if I move my chart to something longer, let's say monthly chart, you'll notice that the last time the USD JPY was trading here at above 150.19 was in Monday, September 3, 1990. So currently, Japan has been attempting to support its currency. It doesn't want its currency to be losing too much against the dollar. So this is where we had the footprints of market being supported here, or basically the Bank of Japan supporting its currency. But then immediately that happened, we saw the reversal, and there's more and more pressure towards the upside, basically implying that traders are speculating against the Bank of Japan. They are questioning its commitment to support its currency because on the other side, the Bank of Japan continues printing currency to stimulate the economy in its ultra easy monetary policy. So in this case, what we are seeing here is the market attempting to push above this area. So remember, even last year, the highest price that we saw was around the same level, 151.938. And now the market is attempting to go back there and break above. So while we continue trading bullish on this particular chart, you have to be aware that there are several things that could cause a sudden drop in price. And one of those things would be the Bank of Japan intervening in the currency market. And then the other thing would be a dollar weakness as a result of inflation data dropping further than expected. So if there's a surprise drop in inflation, and that means that the Fed may not go for other rate hikes, then you could be seeing a sudden drop in these prices. And of course, an immediate target would be the previous level that was acting as resistance, now turned into a support zone at 150.769. But then if inflation is accelerating, then you could be seeing price cruising above this area and moving further upwards. So as for Euro USD, it's the same thing. So we mentioned that we are on this swing where the Euro is expected to be losing to the dollar back towards the lower trend line. But then what we are seeing here is the market entering a consolidation. And of course, for anyone who is observant, you can notice that this is more of a sideways momentum rather than a market that is trending either upwards or downwards. However, in the last couple of days, and I'm talking about Friday, last week, Monday, and today being Tuesday, you can see a pattern shaping up, and the pattern is somewhere right here, where one line is acting as the resistance, and of course, on this other side, we have another line acting as the support. So these are the levels that we will be observing once we get the release of the CPI news to see which direction the market takes. So some other markets are also consolidating. For instance, you look at USD CAD. This is what we're observing here. So it's a market that has basically changed dynamics. And now we can see a triangle shaping up here. And all we can do is be patient and wait for the eventual break, which would present us with trading opportunities once the market shows a clear direction of the breakout. So as for gold, we are seeing a very strong bearish momentum. And this came in after the market broke the lower trend line here. So for anyone who's observing this area here, I'll try and use the 1 hour chart to illustrate how it played out. So there was this period when gold was trading within this channel, moving up and down, up and down. Eventually it failed to form higher highs, broke towards the lower side, pulled back for a while, kept going down, pulled back, kept going down. And now we see yet another pullback here. So using the data from the last couple of days, and I'm talking about Friday last week, then we have, sorry, this is the data we are seeing here. So it's a market that is clearly attempting to break towards the upper side. So from the 1 hour chart, this is how it looks like. From the most recent high down to this high, and then this high, then this high, you can see a market that is pulling back upwards to a key and very important price level that was acting as support. And now we know that the price of gold has only two options. It could, on one side, attempt to go back down and retest the day's low. But then it could also rally, and this is a wild card. We don't know the outcome of the news or even how the market will react. But then chances are, if inflation comes in as expected, which is weaker than the current level, down to 3.3%, then in that case, we should be expecting a weaker dollar, and we could be seeing the price of gold jump to newer levels. So on the short run, we have this previous low, which was around 1953. So we could be seeing the price of gold moving on to this area here. And of course, if it happens to break here, then we could be seeing an acceleration all the way up, getting to 1969.77. So on the downside, in this case, we could be seeing the dollar strengthening, and in this case, just retesting the previous low. So for AUD/USD, we are seeing something similar with what we have just seen with gold. So the market attempting to go up on Monday, finding resistance here, and now continuing with the earlier projection that the price could be headed on the back downwards to the 0.63 206 price level. So this could be accelerated by a stronger dollar in the market, and this is basically dependent on the outcome of the CPI data. So notice how this market formed a head and shoulder pattern last week. I remember drawing this. So market prayed here for a while and then eventually made the drop after breaking below the neckline. So after dropping, it did not get to our support level of 0.63206. So there was a pullback on Friday and then on Monday. But then today we seem to be continuing just as well. So in this case, the projection is 0.63206. So US equity indices continue surprisingly being strong. So after this consolidation, there was an attempt to go back, which was a retest of this trend line. And then the market jumped way up on Friday. Then from yesterday, we are seeing a consolidation, and this is what we describe as muted markets. So muted markets are most often when there is retro candlesticks, retro to no direction in the market, which basically implies that the markets are waiting for something before we see some form of volatility. So in this case, with this kind of price action, it basically means that we stay put and wait for the eventual break. And I believe that will be happening today after the announcement of the CPI data. So a clean break here would mean an entry point either to the upside or downside, depending on the outcome of the news. And it seems to be the core theme across board for the major equity indices. So if you look at the Dow Jones, it's still the same thing, market just consolidating around these levels, awaiting something that will fuel some volatility. So in this case, you just be observant and wait for the market to eventually make a break. So S&P 500 is the same story. Market just making some form of consolidation here. Since the high that we saw yesterday, you can see the relative size of candlesticks is clearly very small, and this basically means that the consolidation is awaiting the news so that you can see a direction in the markets. So UK oil being pretty strong since last week. So you can see the price on Thursday before pulling back downwards, then on Friday even higher, then on Monday even higher, and today being Tuesday, we already have a theme that is developing in this market. So if you're a person who is interested in trading Brent oil, then this could be a guiding trend line for the day. Of course, on the lower side, it's also shaping up. So this is what we are seeing here as the acting support for the crude oil prices. So there could be either a breakout towards the upper side or towards the lower side. And in this case, if the market reacts to this trend line and pulls back downwards, then we are going for this trend line here. So if we see evidence of bearish entry here, then the target is on the lower trend line here. But then if the market keeps pushing higher, and this is more like climbing a wall of worry, we know that there is a major support level here, which is now turned into a resistance. So $84.686 per barrel is now very interesting. Of course, $80.878 per barrel in case the market decides to move back downwards. So European indices are also consolidating. We have a triangle in the France 40 index. So in this case, a potential breakout during the news. US dollar is making a very strong recovery against the Chinese yuan. So in this case, we continue climbing the wall of worry. And this is when price makes a sudden drop and then takes some longer period of time, making a recovery rather than a V-shaped recovery straight up to the previous price. So in this case, if a market is climbing a wall of worry, the recovery tends to be extended rather than straight up. So this is what we are experiencing with the Chinese yuan trading against the US dollar. So in this case, I expect more price action along this path. And of course, if the market is going up, then perhaps you could be retesting yesterday's high. So as for the Euro stocks or the Euro 50 cash index, we are seeing the market testing a very significant resistance here, and we could be seeing the price pulling back downwards from this area. But then this hasn't happened yet, so we only remain patient and see whether there is evidence of a clean break or a reversal happening from this level. I believe this is a very significant area, So if there's a reversal, it will be significant. And of course, if it's a breakout outside to the upper side, it's also expected to be significant. So Bitcoin continues maintaining high prices. So from what we saw last week, a very strong momentum upwards. Then the market consolidating. This week, the market attempted by going down. Then today, you can see the market making an impressive recovery. So we are expecting to see some further upside happening in Bitcoin, especially after the big sell-off that was attempted yesterday. So more on Asian pairs, we have New Zealand USD, which is trending downwards and testing a key level area of support. So from previous prices, you can already see that these are the previous high as well as these. And as long as the dollar remains strong, we are seeing New Zealand USD taking a backseat and the market accelerating further downwards. So in this case, a retest of 0.58564 seems to be on the horizon. And once the market gets here, we observe to see the next direction, especially after the announcement of the CPI news. So as for the USD trading against the Swiss franc, what we are seeing here is a market that was consolidating last week, managed to make a break towards the upper side, didn't quite find the energy to keep going to 0.90711. So in this case, a pullback to this area, and then up and down. And now what we are observing is a market that is trading sideways. So from here, this is more of a sideways momentum. So it's not like a market that is going up or down. It's just moving sideways, waiting for the next data release. And luckily that data release is today. This is when we will be seeing the CPI data. Hello, good morning, Duncan. Let's see if there's any more questions. How do you trade fake outs? Personally, I don't trade fake outs, and I would not advise anyone to be trading fake outs. So fake outs are more of a risk that are faced by traders who trade breakouts. So if they happen to get trapped into a fake out, they exit quickly. But then if they are right and it's a real breakout, then they make some good benefit. So I've never targeted fake outs as a way of approaching trading. Like we had in a gold symmetrical pattern to downwards and later upwards. Gold, let's check on that. Okay, so if the question is about fake outs, I try to think of these as levels, or sometimes you'll hear some other traders calling them confluence levels. So in this case, the confluence is where the market was going down, started going up yesterday. Then upon getting to this level, notice that the level was an acting support, now turned into a resistance. This is the area we are talking about. And of course, in this case, there is this trend line extending from this high and this high, and it's also coinciding with this level here. So since price got into this area, it seems like it has broken out above the trend line. But then, judging from the candlesticks we are seeing and the quality of these candlesticks, it's not what we would call a clean break. So the market is still trapped within that zone, trying to determine whether the direction is moving up higher or whether the direction is breaking back downwards. So since we don't have that data yet, that's why we basically wait for the news and see what might happen. So in this case, if it's a consolidation such as this one, then you draw your two trend lines, mapping the two extremes, and then wait for the eventual break. So we know that a break will eventually happen. The market will not stay within these two trend lines forever. So you just be patient and then wait for the direction of the break, and then that will present a nice trading opportunity. So remember, we don't know how the market will react to the CPI news. But then one thing we know, if a market is stuck at support or resistance, then the chances that the market will make a big move after the announcement remain significantly high. So a good question from Kirote. Good morning, Rufas. Kindly assist in explaining how Fibonacci retracement is used in measuring risk-reward ratio in MT5 platform. I don't know. I don't think the Fibonacci's are supposed to be used to set risk-reward ratios. So when we are doing risk-reward ratios, we don't use the uh, Fibonacci tool. We use this tool here called the crosshair. So the crosshair is more of a meter rule, more like the ruler that you had in primary or high school. So you use it to measure prices and estimate different price levels in the market. For instance, let's say you want to enter a trade here, a short selling trade, and set your stop loss just above this area here. And you also want to target making a profit, let's say when the market gets here. So if you don't know your risk reward ratio, you can use the crosshair tool, come from your entry point and then measure the number of points towards the stop loss. In this case, it's 308. And of course, towards your take profit, if you read crosshair here, this is 740. So to measure your risk reward ratio, you take 740 and divide by 308, and that will give you your risk reward ratio. So in this case, 740, I'm doing this on my calculator. So this is 2.4. So your risk reward ratio is 1 is to 2.4, meaning that for every dollar you are going to risk in that trade, you stand to potentially gain $2.4. And if that qualifies as your minimum risk reward ratio, then you definitely go for the trade. So the crosshair tool is the one we use to measure pips by clicking, holding, and dragging to your desired level. And then you'll see the number of points on one side and the number of points on this other side. So another good question here, how do you interpret this? Say the print is lower than the previous reading, at the same time being higher than the forecasted, like the recently released data increment count in pound, explain, and expound. So in this case, it's all about the overall picture. So the idea is not to trade the number, but what the number means. So in this case, when you're looking at these numbers here, and try and confirm to make sure I'm sharing the right screen. So when you're looking at these numbers here, they're not just an outcome that you see this is what happened over the month, or this is what happened year over year. It's part of a story. Think of it as a story. And in this case, the story is pretty simple. It's the Fed's fight against inflation. So the story has many twists and turns, but then you need to understand the overall trend. For instance, for the US, we know that for the last 3-4 months, it has not been a pretty story. So since getting to the highest price, highest inflation rate, which was 9.1%, notice how we have been having this smooth story, showing the consumer prices dropping month over month until they bottom at 3.0% in July. So we look at the August data, there was a slight increase. We got to 3.3%. Then September, we got to 3.7%. Then October, I think it was, yes, 3.7% too, because it was the same number as the expectation. So from then, now we're expecting the story to continue further downwards. So if this was going up, then for 1 month it held steady at the same level, and now it continues dropping, then you can see that the overall trend has remained the same, despite having a couple of months where prices were increasing, and now we are back to the same trend of prices moving downwards. So in that case, if we see a number that is generally lower than 3.7, then that will instill confidence that inflation is moving in the right direction, because remember, the Fed's target is 2.0%. But then a sudden increase in inflation would literally surprise the markets, and that would be the point of worry. So as long as the number is below 3.7, then that should be sufficiently indicative of inflation moving in the right direction, less potential for a rate hike, and in that case, weakening to the dollar. But then a jump above 3.7%, that would be absolutely bonkers. And what that means is that the Fed may have to tighten policy further. And as a result of that, we should be seeing the dollar flying higher. So I hope that was clear for everyone. And you will be able to understand the data once it's out and react to the market. So good question from Nairobi Intruder. What's a fake out? A fake out is a breakout that doesn't play out. I think that's pretty simple. So if you ever have a breakout in a market and the breakout doesn't play out, then in that case, it's a fake out. Don't know if you can find a good example of such, but they tend to be quite consistent. They happen every now and then. For instance, we have this one. You've marked this area as your resistance. Market comes, breaks above that area, but doesn't proceed to move higher. So in that case, we just call that a fake out. So they happen every now and then. Notice again here. Market gets to support, breaks out, but doesn't continue and moves in the opposite direction. In that case, we call that a fake out. So they take many sizes as well as shapes. So you just have to observe when one is happening. So as we approach the end of the presentation, we should know that we have another session at 4 p.m. So knowing that the CPI data will be released at exactly 4:30 p.m., we'll be having a session to trade the CPI live. So the session will be starting at 4 p.m. So by the time we get to 4:30, I will be live, and hopefully everyone will get to benefit from this. So make sure to subscribe to the channel and get your notifications on so that when the session is live, you'll be able to attend and benefit as we continue the session. So lastly, I would like to invite all of you to a very important function and event that we will be having on the 24th of November, which is this month. And the event will be running from 3 p.m. to 11 p.m. So make sure you come prepared. So it will be at Sky 8 City, Diamond Plaza 2, Dress Like Money. And we'll be having live DJ sets from DJ Grouchy and DJ Mr. C. And the event is to celebrate the fact that FX Pesa has reached the 1 million milestone event. So we have educated over 1 million people on finance through our various events and platforms. And we felt that this was something worth celebrating and sharing the journey with you guys. So we'll be having a financially incorrect live podcast debate, and this will be covering entrepreneurship, what has employment, trying to get what's the right path. So there will also be team games with prize money to be won, FX Pesa, Mwanzame Creative Artist Collabo Showcase, and of course, there will be lots of fun and mingling. So you definitely have to reserve your spot. The event is free of charge. So I'm basically dropping the link on the comment section for anyone who is interested and might be available at that time. Hello, Rufus. Do you trade the news? Rarely. Mostly I'll be on the bench watching how the market reacts to the news. And then once things have settled and I've avoided the extreme volatility, then I see if one of my trading ideas plays out. In that case, I might consider looking for a trade. All right, guys. Thank you for your time, and I hope to see you on the next session.